So I'm happy to introduce and to moderate the last but not least session dealing with intangibles, with the title Human Capital Reputation, Intellectual Property, Innovation Capacity, etc., etc. Are intangibles the missing link between finance and sustainability? Before presenting, thank you. Before presenting the three great people we have on board for the roundtable, and we really have a dream team, as you will see. I would like to see four points in introduction. The first is that our ESG Commission at EFFAS had always been at the front to deal with innovative new journey issues. In 2010, we did a great job. We were the first on Earth to publish KPIs industry by industry, ESG KPIs. And I was part of the launch of SASB a couple of years after, and I can guarantee you 100% that they had the document in the front of the roundtable, because it was one of the few quality documents to work on. The second point I would like to remind you is that it has been said this morning, SEC, the US, today they are screening climate change. It's not a surprise, but at the same time, human capital. And human capital is one of the three pillars when we think about intangibles. And it's not a surprise at all. And we all know, because I'm also a practitioner and portfolio manager, that today, and that will be more in the future, market value, the large majority of the market value of corporates, issuers, come from intangibles. And that's the same thing, large majority of investments of corporates today are intangible. Software, data, trainings, blah, blah, blah. Before announcing our three speakers, I remind you that when we think about intangible, there are three main pockets recognized: human capital, so it can be trainings, diversity, and so on. But that's also organizational capital. So we think about data, intellectual property, information technology, etc., intellectual property, of course. And last but not least, relational capital. So it can be, for instance, client satisfaction, quality products, or the supply chain. So I stop here, and now I'm introducing our dream team. And we will have as the first speaker, Professor Stefano Zambon. Professor Stefano Zambon is Professor of Accounting and Business Economics at the University of Ferrara, Italy, and Secretary General of the Italian Foundation for Business Reporting. He has been a founding member of the Network World Intellectual Capital Initiative, and of which he has been the global chair from 2015 to 2019. And today, he is member of the of our commission, and also of the ESMA consultative group on corporate reporting. Sorry. Then we will have, and Stefano will start this roundtable. He has just finalized an interesting and key research, academic research, focusing on intangible with two panels, corporate panels and investors panels. And then we will have a second great person, Mr. Jan Bishop. Jan Bishop is the Chief Accounting Officer at Roche, a global, but I remind you that Roche is a global scale company based in Basel, Switzerland, specializing in pharmaceutical and diagnostics. And he has been at Roche for 20 years, and there leads the accounting, consolidation, and external reporting teams. And Jan is the chair of the IASB's Global Preparers Forum, an advisory group that provides input to the ERSB from preparers' perspective. And he is also co-chair of the Accounting and Financial Reporting Group at Swiss Holdings. And Jan will present his view regarding intangibles, and also the view as a corporate, especially in the sector of pharma, where intangibles are so important. And finally, I'm very pleased also and honored to introduce Gianluca Manca, who is the head of sustainability at Eurizon Capital, Intesa San Paolo Group. He's member of the EFFAS Stewardship, Market Integrity and ESG Investment Standing Committee, and a member of the European Banking Federation Sustainable Finance, where he serves as chair of the ESG Reporting Task Force. And he's also currently a member of the board of the EU Ecolabel and a member of the EFFAS advisory panel on intangibles. So you've understood that we have the dream team to go through, and I immediately let Stefano starting with the results of his recent research. Thank you, Stefano.
Thank you. Thank you. I hope you can hear me well. My task here is to provide you some results. So this research, just to explain to you, is a large research. Hopefully, it's not. Yeah, it's working now. Apparently, yeah, it's a large research and on the production and consumption. That's the way we call the information on intangibles. We made an empirical a large empirical investigation with CFO and investors. The team is that of the University of Ferrara, that is in Italy. So the idea is that to have empirical insights on what is the perception by preparers and users, by CFOs and investors about the information on intangibles, which nowadays is becoming very important, not only for the economic transformation processes we're running through, but also is very important for the because of the new directive, the new proposed directive that makes it mandatory the publication of information on intangibles. So intangibles will be part of the sustainability reporting. And also the fact is that research has never been able really to crack very much the empirical aspects of information on intangibles, the perceptions, the very few studies in the last 20 years, because for many information on intangibles are not published, though they are just the financial information on intangibles, but not the softer one, they are not published generally. And of course, we would like to contribute to the policy debate that is taking place both at European and international level. Very quickly, methodology, large international survey with a dedicated website. And what we try to do is also to test the different sensitivities, because the surveys, they had a general part and a specific part. The specific part was based on a case study, of course, a mock case study, but we tried to have a differentiation in the case studies. So the case studies were 3 actually, but of course, people that were filling in the survey didn't know. So we proposed an IFRS IS 38, the traditional financial statements. We proposed data of financial statements based on fair valued intangibles, and a third case study on IFRS plus KPIs and narratives on intangibles, similar to integrated reporting. But of course, these 3 case studies were separated, and so each respondent could see only one of those. So we wanted to see the different perceptions. And of course, as has been mentioned, we had 2 online meetings with 2 focus groups, one on users and one on preparers. That was very helpful and quite large focus group. And this allowed us to have a unique empirical database because, as I said, this allows us to overcome some of the problems of the academic research in this area. And that's why also academic research made some difficulties trying to get some empirical insights. We had 314 respondents. The surveys were very long. It's kind of 54, 57 questions, depending on the number 1, 2, or 3 of the case studies. The 20% of those were preparers and 22% were, users, 20%, preparers 22. And users is 40% buy side, 30% asset manager, 10% sell side. And preparers is also interesting to see that the survey attracted a lot of interest by unlisted companies. They were the majority of preparers coming from unlisted companies, and large companies 43%, but SMEs were 35%. So it's quite unusual and interesting, stimulating result. 113 people completed the whole survey, which took an hour and a half. So it was a job. some of the emerging important aspects on the general questions, those about the general aspects of intangibles. There's a clear, strong convergence that intangibles are important, a fundamental component of corporate reporting, corporate information, but is currently lacking. That's a very high scores, both from preparers and from users. Preparers tend to privilege, they wanted to have more information on human capital, intangibles related risks and opportunities, whilst users prefer more IP and know-how. So there's not a total convergence about what are the most useful categories of intangibles, generally speaking. And for where to position the information, there were a good convergence by preparers, CFOs, and users, investors, for either as a supplementary notes to financial statements or in a non-financial reporting statement according to the non-financial reporting directive, integrated report, and management commentary. I must say that this has been asked, this area was asked before the publication of the proposal by the European Commission that proposes to put this information, sustainability and intangibles, in the management commentary. But in a sense, we're not so far away from that indication of the Commission. The current framework, the preferred frameworks, are the International Integrated Reporting Framework, followed by a revised version of IS 38 that is not there, but still apparently ISB would like to address this issue. And the third possibility for a best framework and standard will be the new directive. The disclosure should be a combination of narrative information, KPIs, and financial figures. And auditing is absolutely necessary for everybody, but there's a need for a proper auditing standard that is not yet there. Another important element, which is very much related to what we say here, is the overlapping between ESG and intangibles. For users, there's a quite large overlap between ESG and intangibles. Preparers tend to be less convinced by that overlapping. For some preparers, it's interesting that intangibles represent a precondition for ESG. There was a quote that the preparer said, what intangibles do is to improve the effect that we can have on these ESG indicators on the climate and nature side. So in a sense, there's clearly a functional relationship, an overlapping, especially for users, but not necessarily 100% overlapping. Nobody said that, apart from one, I think. So what we can see from the general questions is that intangibles are not perceived, information intangible, not perceived equally useful by preparers and users. Users tend to have more trust. They need more information intangible. Preparers tend to be slightly more cautious, prudent. Other factors really is about, didn't have too much of an impact apart from class age class, but really is the position in the field. So either you're a preparer, you tend to have, statistically speaking, that position, or if you're a user, you tend to have a different position. As I said, preparers tend to be more conservative, but this might be linked to the fact that, as I told you 1 second ago, that there are many preparers coming from SMEs and unlisted companies, and probably they're worried about the higher cost they have to support, they have to incur to produce information on intangibles. Now, looking at the specific, these are specific questions in the sense that they are addressing the case studies that we provided. So we said, this is the case study, this financial statement, this is the information. What do you think about making, the decision-making usefulness? Again, the users tend to be more optimistic in a sense that they seem to find this information more useful than preparers. And in general, they seem to be in favor of the case study 3 users, in the sense that then, let's say, integrated report to cut it simple. But instead, preparers, despite they say, no, we think that it's important to have more information intangibles, information intangibles is lacking, they still privilege case study 1, which is traditional IFRS statement. So it's a bit of a contradiction here, probably something to do with the comfort zone, maybe some preparers may feel into. These are all the specific intangibles we've been asked in the case studies, things that we all know, brands, R&D, software, IP, business model, customer satisfaction, customer list, reputation, suppliers, training, human capital, organizational culture, risks, of course, and stakeholder engagement. But it's interesting that users are systematically and statistically more interested than preparers in information on those intangibles, with one exception: stakeholder engagement. Stakeholder engagement, preparers perceive that this information more useful than the users. And once again, also in this case, not only to the general question, but also in the case study, the questions relating to the case studies, users and preparers are statistically differentiated. Their question depend on the professional position and not on the specific case study address. This is what statistically emerges. Case studies are not particularly explanatory variable. Inconsistencies, as I said, the case study one is considered the most useful by preparers about specific intangibles. However, in another question, they declared that this case study provides less useful. This case study provides less information on intangibles. So in a sense, on the one side, you consider it more useful, but on the other side, you recognize that less information. So in a sense, probably it's something to do with the knowledge, specific knowledge of preparers. They are more well-versed in traditional financial accounting. And of course, the auditing of IFRS type of financial statements can be also an explanatory variable of this apparently contradiction. In terms of metric, I would like to point out to you there's a joint interest that emerged quite clearly in metrics that we propose in the case studies, but they will be recognized by both preparers and users on brands, R&D, software information systems, strategy and planning, business model, training, and human capital. The metrics we selected, the specific, granular metrics on this specific intangibles that we introduced in the case studies, these metrics has been appreciated with a joint interest. Actually, both preparers and users asked for more. They said, okay, you gave us this granular information. We would like more. There's an appetite for more specific measures and KPIs. So few recommendations going towards conclusions. The intangibles clearly is a particularly sensitive area because which should take into account the professional role played by individuals. So if you're a CFO or an investor, the type of companies, SMEs and unlisted firms versus listed firms, large unlisted firms. The reporting positioning is sensitive issue, is a sensitive issue, even though now the directive will tell us probably that everything should go in the management commentary. And of course, the categories of intangibles, the reactions by preparers and users to different categories of intangibles is not the same. There's clearly a divide there. And so it's also our response, our policy indication said, look at the category of intangibles and probably you can find the best reporting treatment. So there's a need for guidance incentives for companies and preparers, probably more than users. Preparers probably need more time and guidance. Many voices are being heard against IAS 38 and IFRS 3. Maybe Ian can say something about that after me. So there's a clearly, and also auditing standard, appropriate auditing standard is missing. So many, especially the focus groups, have been positions on that. So this is a sentence by a user that the IFRS 3, the one on the on mergers and acquisition, is fundamentally broken. I think it's quite clear what he says. Another interesting proposal to merge is to treat internally generated intangibles, the unaccounted intangibles, similarly to the financial instruments measured at fair value level 3, which means basically the financial instruments that are measured through financial valuation models. Why we can't use the same thing for internally generated intangible? That was an interesting proposal. It was backed by some users and possibly preparers. And in general speaking, clearly intangibles is a difficult area. It challenges the notions, the accounting, traditional accounting notions. We know that we have an asset nowadays. If you control the asset, but you can't control many intangibles despite they are very important. So this opens up, a tension between the current traditional conceptual framework and the intangibles nature and the nature of intangibles. Finally, it's crucial to identify that intangibles, to what extent intangibles are overlapping with the ESG. ESG, of course, are important element, about a fundamental element, that's not under discussion, but intangibles, for many people, are not the same as ESG. The confusion between intangibles and ESG that has emerged to some extent may reduce and blur the recognition of an autonomous role of intangibles in the company value processes. In this respect, I would like just to close basically with this figure that was in 2016 was elaborated by the Wiki in the Wiki Intangibles Reporting Framework. I was chairing that committee, and where clearly corporate reporting has a financial aspect, sustainability aspect. We all know that, we are more happy with that. But of course, in between, there's a connecting glue role is played by intangibles. And so there's a need for better understanding this synergic aspects between intangible and ESG, and there's a fundamental decisive role of standard set and policymakers. The direction of travel appears to be settled, not yet the path. Thank you very much for your attention.
Thank you, Stefano. And we have already a part of the answer to the question of the roundtable with the graph you've seen with the different colors and the glue of positive glue of intangibles. We are going now to have the point of view from Jan, the point of view of corporates. Jan, the floor is yours.
Okay, can you hear me okay?
Yes, great.
Great. I have a few things to say, but I try to leave a bit of time at the end for any questions. So thanks for the invitation, and maybe just a caveat at the start, the views I express here are my own and not necessarily those of the Roche group. And also I'm the Chief Accounting Officer, so I'm speaking from the perspective of financial reporting and not our sustainability reporting team. So the topic today, are intangibles the missing link between finance and sustainability? Maybe. It depends. And that's maybe not a great answer, so let me elaborate a bit. But first, one thing I must make very clear to everybody. If anyone from the sustainability community thinks that there is a readily available solution in the financial accounting world for intangible assets that can simply be rolled out into the ESG world, then you're wrong, you're dreaming. Because we can legitimately rephrase our question to say, are intangible assets the missing link between financial reporting and the real world? Because make no mistake about this, the current rules for financial accounting of intangible assets are, in my view, an abomination. They are completely broken beyond redemption, and the failure to address this is an embarrassment to the accounting profession that dates back at least 30 years or maybe longer. The existing financial reporting model is still based on the type of heavy industries that were prevalent in the 1930s to 1970s, with some add-ons for financial services. But the whole concept is not really up to date for the modern world, where so much value is now attached to non-physical assets. And what I say there, that's before we even start talking about ESG topics. So to illustrate this, at Roche, where I'm the Chief Accounting Officer, in our last financial report, our market capitalization was 300 billion Swiss francs, and the book value of our equity was 40 billion Swiss francs. Now, what can this mean? It's quite a gap, isn't it? So let's just assume that capital markets are efficient, and I'm not going to question the Roche stock price or market capitalization, absolutely not. So logically, we're either overstating our assets, overstating our liabilities, or understating our assets compared to the real world. When we have a very quick look, we see what this means. In 2020, half of our sales, about 23 billion Swiss francs, came from our oncology franchise. These are anti-cancer drugs. Now, these are all patent protected, and the patents in this sector typically last around 10 years, in some cases longer. So you might think that the patent rights to this intellectual property, 23 billion annual sales, 10 years, you might think that would be pretty valuable. And you'd be right. It is pretty valuable. And when you look at the analyst models in our sector, it's a very large chunk of what their price is. The book value, absolute zero, nothing. How come? Because we developed them ourselves. All of the R&D costs to get them to this state have been expensed years ago. If we'd in-licensed them from a third party, they would have been recorded at cost, less amortization. And if we'd acquired them through an M&A transaction, they'd be on the books at fair value at the time of the deal, not now, and again, less amortization. So what happens in our sector, suspect many others, all of the analysts in our sector take a big red pen and put a line right through this intangible asset number, and they do their own calculation. So to be clear, the financial accounting rules don't adequately address recognition. And by that, I mean, which intangibles are actually intangible assets that you should put on the balance sheet. They don't adequately address measurement. There's no consistent way to value them. And what you see in the balance sheet is a goulash of assorted fair values, historic costs, amortizations, and impairments. And the financial accounting community also gets sidetracked by IFRS 3 and irrelevant theological discussions on topics such as should goodwill be amortized or impaired. The correct answer to that question, by the way, is who cares? Consequently, in the real world of outside of the little bubble of financial accountants, there's no faith, trust, or reliance on the intangible assets numbers. They're quite literally useless. So what's to be done about all of this? And here I'm hopeful that the whole development of ESG topics and reporting can actually bring fresh energy and thinking and also an impetus to actually get some action done. And firstly, I'd say the accounting profession and specifically the standard setters and regulators, they should fix the accounting rules before they try to save the world. That's their job, get good accounting rules. Specifically, we need to think which intangibles are actually intangible assets that should be on the balance sheet and which ones shouldn't. Once they're on the balance sheet, how should they be measured and reported? And just as importantly, how should they then flow into the profit and loss account? Because once you've got them on the balance sheet, they then flow into your earnings figures at some point. Is this quality earnings? Do we need to think about that? We certainly need to consider that. And just to note here, intangible assets, as was mentioned earlier, this is a topic the ISB may put on there as part of their current agenda consultation. If you get a chance to vote for that, please do so. So just to wrap up, to get serious action, I think ESG metrics need to be defined, measured, reported, regulated, and audited. And this needs to be done consistently and transparently. And whether that means the results belong in a finance report or on a company's balance sheet, that's a different question entirely. And to illustrate that, I'll just leave you this one example. Would you say that the quality of senior management contributes to the value of a company? A lot of people would say yes. If so, is this an intangible? Perhaps it is. But then if it is an intangible, should the company measure that themselves? And how exactly should they do that? And if it's an intangible asset, does it go on the balance sheet? And what I'd like to know as the Chief Accountant Officer, I'd like to know how I should be thinking about the useful economic lives of senior management and how I should be considering impairment issues. Once you get into the details, you see a lot of the problems come to the surface. I'll leave it at that, but I hope to get some questions on some of this later. Thank you.
Thank you. Yeah, very interesting input. Thank you very much. We are going right now to have the voice, the point of view from investor with Gianluca. Thank you, Gianluca.
Thank you all for the invitation. Good afternoon, everyone. And thank you, Stefano and Ian. I was very inspired by your words. Now, Ian was very blunt in saying, okay, do we put intangibles in the middle between finance and sustainability, or do we put this thing in an interconnection with the real world? Well, I think that's the second interpretation is the one I would marry straight right then and there, because the real world is made of a lot of values that are not accounted for in a lot of firms, and we all know that. And when I started to work as a fund manager, I was shocked to think that over 80% of any index I would put my hands on in developed countries would be basically represented by intangible. And because of this reason, I started to look into it when the sustainability movement became more integrated into the financial reporting to begin with, and then in the considerations that we have on the side of the asset managers. So I started to consider a lot of the things that happen, and Ian also mentioned, is the quality of the people in the company an intangible? Yes, it is, because we can't value it, but we know it's there. So what is the approach that a company with a lot of top managers that are much more skilled than others reflects on the value of the company? Well, that's totally intangible in the sense that fund managers have to take that as a gut feeling only. There's no way that you can entrap this into any valuation today. The same thing we could think about the attrition rate, for instance. It is clear that the amount of people that go away from a company that is less desired than other companies to go work for, well, creates some kind of a gap of efficiency that the population that inhabits the company A that is basically the attraction point for many, and the other one that is less attractive. So we could eventually try and imagine, not in crystallized terms, as Ian was referring before, but just in terms of an exercise we do internally as asset managers, we could try and give a value to what it means being efficient in the company. So efficiency of the one single worker can be measured somehow and accounted for with the cost of providing that efficiency. These are all things we can do, but are they meaningful in terms of the appropriate accounting as they are seen today? No, they're not. So this is why I sympathize so much for what Ian was saying. So what we are trapped into now is a self-evaluation model that we need to use for anything we see going on, especially in sustainability, and trying to give a value to that. Now, is this thing viable for the long run? Probably yes, because we've been going on this way for a very long time. And I'd like to remind you that the capital asset pricing model was incepted, I think, in the early 50s, and we're still using that. So I don't see how now, with the urgency, yes, of considering sustainability, it's there. But at the same time, there are so many other angles in the consideration of what finance wants from the sustainability world that I trust that intangible will stay there as a matter of study for quite a while, but I don't see the standard setter jumping into it and changing the rules of the game, because a lot of rules have changed already, and as probably you've noticed, the parliamentarians are delaying the process of application of all the Green Deal, meaning that the financial system is under stress now for the quite considerable amount of legislative packages that are falling over it. So is this something that is going to be interesting for sustainability tomorrow? Probably not, but it's on the radar screen of every analyst today and possibly every lawmaker. In EFFAS, as you well know, as has been noticed before, we are starting to consider within the Corporate Sustainability Reporting Directive, simply because the Commission gave us the guidance to look into intangibles and how they can relate strictly to what we're working on in terms of the new voices on our profit and loss and the new voices on our balance sheets that will have to embrace sustainability in a way that becomes accountable for. So my expectation for how intangibles will be dealt with in the medium run is quite meager in terms of expectation that this thing is going to be done and dealt with properly. But I know for sure that this is one of the biggest issues that sooner or later standard setters will have to finally resolve. Because as Ian and Stefano said before, sustainability is around the corner, yes, but there's the real world out there that needs to be accounted for before anything else. So I'll stop there, and I'm ready for questions. Thanks.
Thank you, Gianluca. We're going to start with some questions in the room. Do we have some questions in the room? At this stage, I don't see, but perhaps online?
One remark online. Thanks for your presentation. My remark is that only intangible examples concerning human capital have been spoken. However, the emergency concerns global warming. How to deal with carbon emissions in company accounts? Question mark.
Does someone, Gianluca or
Yes.
Stefano, do you want to take the question?
I will take it for what it concerns, of course, an asset manager. How to deal with carbon emissions of the company. We all know that there's an emission trading scheme. We all know that emission trading schemes are starting to work and to give a price to carbon. So if there's an exercise that possibly it's easier to put in place is the carbon cost. So I think that this is one thing that will cease immediately to be an intangible, and it will go straight into black numbers, simply because we have the tools now to account for that. Yes, the system is not ready yet. It's not perfect. Each country is trying to build on their own. We know that China is willing to create a platform of emission trading schemes that basically cover all of Asia and eventually the world tomorrow. So we know that a price to carbon is possible today, and this is the perception of an asset manager. Thanks.
Yes, but perhaps to complete that, for a wiki in 2019 for G20 and B20 did disclose a short note dealing with intangible and SDGs. And the first remark was that, of course, some intangibles are at the core of some SDGs, such as gender diversity or decent work. But also intangibles are enablers for other SDGs, such as climate change. Just think about education. Sorry, I'm going to be a little bit provocative. When you have limited education, for instance, Trump, you have not much change in climate change. So education is at the front also to deal with climate change. So it's a simple example to connect intangibles and environmental challenges. Yes, Jan, please.
Yeah, maybe I can just come to the question. I think it's a very good question. And as a preparer, one of the things we struggle with is so-called emerging topics, and there seem to be an increasing number of these. And it's basically the accounting standards process is maybe not quick enough and agile enough to deal with these things. So topics such as cryptocurrencies, carbon trading, these kind of things, preparers are kind of struggling to fit these into a framework of regulations that were maybe written 30 or 40 years ago. And this is where I think the standard setters can really help as well, is actually giving guidance to preparers about how actually you should do the debits and credits for these things. Because I was at a meeting earlier this week with my peers from the other large pharma companies, and we're struggling with this, quite frankly. And you know, companies like mine, they can afford to employ someone like me to think about these things. Smaller companies are going to struggle with this because they won't have that expertise. So I really think we need to, not only with all these new topics that are coming up, we need to deal more promptly with actually how the financial reporting works. And there should be a consistency, particularly between the ISB and with the US and China and other places, that there is transparency and consistency about this, so that people know what they're reading.
Do we have other online question on that? The last one. I perhaps have one question for the panel. Finally, are intangibles only a story for blue chips, for large companies such as Roche, because they're very rich, have very many resources? So are brands, R&D, intellectual property, and so on only a question for blue chips, or are SMEs also on board?
I can have a first go. I mean, in the healthcare sector, they're very much, actually, they're more a topic for the smaller companies, because typically a smaller company in the biotech sector, when you look at their balance sheet, there's nothing there. You know, they're basically, their share price is totally supported by the aspirations of what they're doing. They've got nothing on the balance sheet. So it's even more relevant for smaller companies. And these are the guys who don't have the resources to do the financial research themselves. They need solutions off the shelf that they can take off and they can apply it simply in a straightforward manner. That's what the need is for it. I think it's even more for the smaller companies than the big ones. The big ones, we can try and work it out ourselves.
Thank you. Yeah, Gianluca, I let you answer also.
Yes, I would like to, because it's late and we're the last panel, I understand, I would like also to make a note that is also savory at this time. Imagine a pizza restaurant. Two pizza restaurants are two small enterprises, of course. They're small companies, and they might be characterized by the quality of their product, of how it's built and how it's put as an offer to their clients as the greatest intangible that they have, simply because depending on that quality, the clients will move from a place to another and can determine a totally different cash flow, for instance, for these companies. So I would like to echo modestly what Ian just said and transfer it into any small reality. Yes, intangibles are meaningful also for small and medium.
Thank you. And last word coming from Stefano before I conclude. Stefano?
Thank you, Jean-Philippe. Thank you to Ian and Gianluca for inspiring words. Just to give you, I will try to give you a more comprehensive response to the two questions. When I said that intangibles are the connecting glue, I mean that there are fundamental elements despite the differences inside intangibles. As Ian pointed out, there are certain intangibles that are really, really intangible, so to speak, and some others that are much more clear, much more evident. So ESG passes through a connecting glue that is made by intangibles. Value creation passes through. So I don't see regarding the first question, I don't see intangibles as different from. I think this is sometimes a bit of a sustainability too much of a perspective. Sustainability is nurtured, is helped by intangibles. So in a sense, information on intangibles, as our research demonstrated, is clearly something welcomed by users, especially, but also by preparers. On the SMEs, in 2006, I was part of a task force of the official task force, European Commission, that produced a study called Ricardis, which is a strange nickname, Ricardis, that you can easily find still in Google. And which it was exactly how you deal with intangibles in SMEs that are research-based. Ian is just perfectly right, and Gianluca, I mean, especially SMEs that are research-based, they're based about, on some innovative processes and so on. There's nothing, no information on this in their financial statements, in their accounts. So clearly, already in 2006, the European Commission was putting an effort. And finally, as a last piece of news, in a sense, I think the task force that is now elaborating sustainability reporting standards at EFFAS that today, we heard from Patrick de Cambour, I think is taking intangibles relatively, I think, seriously. I can announce that just today I've been included in the task force, in particular in the cluster number 1 that deals with conceptual issues, with the task of helping about intangibles. It's not a solution, as I said, but it's a direction of travel. So thank you for this possibility again to EFFAS CESG.
Thank you, Stefano. Two short points to conclude. As we can notice, it's not because it's complex that we have to forget this elephant in the room, which are intangibles. And the second point is very concrete because I'm a practitioner, I'm a portfolio manager, equity portfolio manager, investing in Europe and globally. And with modesty, I can guarantee you that every day I'm happy to integrate with modest terms, but intangibles to generate alpha and reduce risk. So it comes from the reality. It's not just a blah, blah, blah and theory. So thank you very much, Stefano, Gianluca, Jan. I have to stop. I'm the bad guy in this roundtable, but thank you very much again. And I'm going now to conclude the full day in 15 minutes, which is, a very easy exercise. Bye-bye, everyone.